Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, Friday. This is a pretty quick week, wouldn't you say? And I don't think we really have any too big of news today, so I think we should be able to relax somewhat. And our short in the treasuries, well, it was down a lot. Down big overnight, but they've recovered most of that. So we're mostly where we were at yesterday. Let's come in and take a look at the charts. Some rollovers here. Just take care of that real quick. Look at that liquidity hole that they had there at the top. Like, how do you get such a strong trend and then it just literally hangs there and just trades in a 2-tick range? Why does that happen? Liquidity holes. That's why. Well, anyways. So here you can see we did have a move lower overnight, but then in the past hour or so, we have floated back up to pretty much unchanged from yesterday. The S&P 500, on the other hand, just continues on this roaring bull market, man. The whole NVIDIA thing is just crazy. I was looking at NVIDIA actually, I still have the chart up. Still have the chart up of NVIDIA overnight, man. Like, look at that. Okay. There was the earnings. They were up big overnight there. They're up big in the morning session. They're up big during the day. Then they kept going another 2% overnight. It's absolutely bonkers, man. And I was actually kind of looking, because people were asking about the valuation. I was actually looking at the valuation, and if NVIDIA market grows to the size that everybody is predicting, it's actually priced correctly, and you could still make money on NVIDIA, believe it or not. Anyways, so yeah, the equity markets are just absolutely crazy right now. Problem is, though, is that it's just like 7 stocks. All right. Oil down this morning. Gold and silver. Well, gold and silver were down a little bit because of the interest rates. And of course, the interest rates did decline through most of the session and the overnight, but they are now, pushing back up. And so gold and silver have pushed back up accordingly. Silver taking a little bit more of a hit than gold there. Here we got copper. Copper taking a hit, big hit overnight. So I don't think they liked some of the economic numbers that were released in China and Europe last night. And then we got the dollar. Okay, well, the dollar has been pretty weak this week, but that was a decent pullback there overnight. And then you got Bitcoin. Well, Bitcoin, not really all that interesting this week, is it? So, is it a bubble? Octavia says Bubble City. I'm not sure that it is, man. I think that the okay, so what do we got here? Oh yeah, that was an experiment I was doing. I tried sending our friend that is having trouble with our indicator. I tried sending him a version of it that just like set a certain thing to try and get around the error that I think is seeing. So depending on whether he still gets the error or not, that would tell us where the issue is. But when I sent it back to his email, the email that he had sent to me, rejected it back. That's why that was up. Anyways, no, NVIDIA's valuation is not a bubble, in my opinion. So they're saying, like, saw some analysts kind of walk through it, and they think that the AI chip market is going to increase to like 500 billion. And if it does, then the Nvidia valuation right now is not terrible. But if that's true, then you can still make money from buying Nvidia even here when it's up like freaking 20% in 2 days or whatever the thing is. Yeah, hint lag. I tried sending it to you and it rejected me. I don't know if it doesn't, like, the email that you sent it from isn't really the email you sent it from or something. It's kind of weird. Let's see here. Oh. Yeah. It's a Gmail. Oh no, you know what? It wasn't because of the email. It was because it wouldn't let me send a zip file. You really, if you get on Discord, I can send it to you there. That's really the way that you should probably be doing it. But Gmail will not let me, because it compiles to a DLL. Am I the only one here losing money? I hope so, because I wouldn't recommend shorting this. Here's the thing, guys. And this is a mistake that I've never made, only because when I started and I started seeing this stuff, I didn't have the money to do it, But when the market gets crazy like this, because really, that is just a bonkers chart. I mean, and when you come back and you look at it on a daily basis, that is really an insane chart. I have really never seen anything even close to comparable to that. I mean, maybe some penny stock that goes crazy, but like the largest corporation in the world, or one of the largest, top 3, 5 largest, depending on whether it's the US or the world, moving like that is just insane, right? But here's what I have found, is that when the stock market in particular starts to get crazy like this, it's just starting. Because what happens is you're getting this crazy stuff, and then it's on the news, and then all of these people are like, oh, I should get into the stock market too. And then they're like, well, maybe Nvidia has gone too far, so then they start investing in all of these other things like Supermicro, right? What is it? No, it's a stock. Super SMC. Oh, I did have that right. Okay. Look at that. They had a huge decline. And then yesterday, up big again. Up huge again. Yes, Discord will require you to verify that you're a real person with your phone number. And you can potentially, I mean, if you don't actually have a phone, you could try getting like a Google Voice phone, potentially. Would be one way of doing it. I don't know. There's lots of people spamming in Discord, and they have to go through the phone verification, and they're getting phone numbers somehow. I don't know how they do it, but you tried it on. No, it's got to be your data, because I realized that the place that it was giving an error is kind of a critical thing. So what I've done is I've created a workaround for that one automatic feature that should make it work at the very least, and then I can kind of look at why your chart does not load the same way that everybody else's does. Because basically what happens is that, futures have expirations. Right now we're on the March expiration. So when the expiration for all of the currencies move over, you want to move all of them together. And the indicator is doing a little bit of magic to figure that information out and determine which month it should be on. And what's happening is when the indicator goes and looks that information up, it's not loaded on your chart for some reason. Like everybody else's, it's already loaded, but on your chart, it doesn't. So I'm just going to skip that part, see if it still works. If that works, then I'm going to try something like, well, maybe that part needs to be done somewhere else or something. So but anyways, once you get on Discord, send me a message and I can send it to you there. But I lost track of where I was talking about. Oh yeah. So what happens is there's the big headlines, and so everybody comes in, they say, oh, Nvidia, it's up too high, so I'm gonna go and buy super microcomputer. Or what was the other one that we had been looked into? In fact, did I put it on one of my watch lists? I think I might have put it in my watch list. The one that somebody came in Discord or came into the YouTube's chat and asked about. Did I create an AI section? Yeah. Soundhound. SOUN. There you go. Look at that. Yeah, I was using Koifin. If you have a better watch list, I'd be open to hearing it. But they have a great watch list because you can come in and like look at this. You can see like well, okay, so like all of the technical metrics I want to look at, like 1 day, 1 year, 5-year return, the beta relative to the S&P 500, 52-week high, 52-week low, short interest percentage, but then it also gives me things like what is my earnings per share 5-year forward growth percentage? What's my price earnings growth number? What's the earnings per share estimate? Right? So I'm coming in here and I'm looking at these and I'm like, okay, I want something that's going to grow like 20% or more, potentially. Which are the ones that are expected to grow more than other things? And it, and sort of by that. It's pretty cool. Pretty cool. I think it's a pretty good one. No, I don't have the paid version. And I don't really know if I would really benefit from the paid version in this instance, but I tried a bunch of different platforms before I tried Koifin and was like, oh yeah, I think this one gives me what I want. So most other platforms just didn't allow you to put any kind of a fundamental valuation metric on your watch list. So, because the way that I'm trying to do it is top down. I'm trying to say, okay, here's an idea. I want to invest in meme companies, or I want to invest in retiring boomers, right? So I make this section, I add a bunch of tickers, and then I can start doing this kind of analysis and comparing them and figuring out which one is the best. So that's kind of my approach for this talks. This Soundhound one, the way that it just jumps, like what? It almost doubled, like literally overnight. It's crazy. So what happens is people watch that on the news and then they go in and they start buying too. And when you have thousands and thousands of people coming in and each one of those people could potentially be bringing thousands of dollars with them, it adds up very, very quickly. And so when the stock market gets crazy like that, it's usually the beginning of it. It's usually the beginning of it. That is kind of like the beginning of a process that does usually end up in the market overextending and then exhausting itself. But, you know, from this point here, let's just say mid-February of this month, that's just the start. And if it wasn't for all of the stuff that we kind of got coming in March that I'm a little bit concerned about, like with the reverse repo facility getting emptied and the concerns about, you know, treasury liquidity and all of that in the banking system. You know, if it wasn't for that, I would probably be like all in on some of these, because that's usually the start. But just be very, very careful. I think that there's this tendency to say, well, it's up so much. Nothing can go up X% in a week and then stay there. What goes up must come down. Like, that's our natural intuition. And what I have seen, what has been my experience in the stock market, is that it absolutely can happen, and that moves like that can very, very often just keep going. Yeah. Things may be crazy. Time for me to do some gambling. I mean, trading. Yeah. It's exactly it. I mean, that's what regular people do. There you go. I think I see you there. I think that's you. You're going to have to confirm to me that that's you. But really, before I would say that like something is overvalued, I would actually go and look at the stock. And this is really hard because there's not like one formula that you can go in and do and say, this is how you value what a stock can be worth. I mean, there are kind of simple formulas like that, but when you really get into that world, you realize that like each kind of company has different things driving it and has to be valued as a different way. So that's where, you know, having these stock analysts and stuff can be really valuable, because then they can go and they can show you, well, here's how we value this one particular company, and this appears to be the metric that the market is paying attention to. So in the case of Nvidia is going up so strongly because its market is growing like crazy time. And there's a lot of, you know, smart industry people that say that that market could be worth $500 billion a year within the next 5 years. So if it does get to a $500 billion market and Nvidia maintains its share of that industry, because right now it's like most of that industry. Okay, so if they maintain their dominance, which may not happen, if they maintain their dominance, then the valuation is not bad. Even if they lose some of their dominance, I'd say that their valuation is not bad. So yeah, I'd be very careful about just assuming that it's overvalued just because it's been up so big. But the real concern here is, can 7 stocks really sustain a long-lived bull market? Because you know, I'm going to say I don't know, because we've never really seen a situation like this before, where really we're having like a revolution in the economy and it just happens to be centered around one individual company. I don't think that's ever happened before. You know, there's been things like when the information age came along, there was a bunch of different stocks, right? And there was maybe some that kind of dominated, but there was a pretty wide dispersion of them. Whereas in this case, there's just one company that clearly benefits. That company is going to go up, and it's going to exceed anything that you've ever seen, because there's just nothing to compare it to. There's nothing to compare this situation to. Now, perhaps the market can just go off on those few companies. I mean, the index is what it is, and if those companies continue to do well, then I don't see why it couldn't stay there. And we've definitely seen that over the past like 2 years that you can have a situation where it's just 7 and they go up and everything else is actually sideways, or if not down. Could happen. So I'm not gonna like rule anything out, but it is usually not a good sign. It's usually not a good sign when you have very poor market breadth. Okay, upload a file. But the other thing is that again, there is probably a pretty big shift in the economy coming when March comes along and the reverse repo facility is emptied out, and you know, certain dynamics in the funding markets kind of change. Okay, there's the zip file. It should let you pull it from Discord. Then, you know, the next question is like, okay, what if March comes and goes and nothing interesting happens from it? Then where does that put this economy at? I know it's kind of a weird thing because the stock market is doing great, but I don't think that many people are very enthusiastic about it. I mean, if anything, everybody is scared, because there's all these people saying that this change is going to put everybody out of work, right? But I do kind of think so AI in general, in my opinion, is in a bubble. In that AI is not going to result, or at least the current AI that we have is not going to result in the kinds of efficiency improvements and changes in the economy that people are predicting. Like, I'm a computer scientist. That's what I got my degree in. That's what I do for my day job. I'm the one that basically keeps these things running. I'm the one that when these things break and go awry that they're calling. And I'm just telling you, they don't quite do some of the things that people are saying. They're really, really great for like content creation. So this really changes things, I think, for content creators. Like, I'm thinking if I can get access to Sora, I could have background B-roll film for my videos now that I couldn't have before. Before it was just me talking, right? And now I can actually have video and I can tell it what kind of videos I want, right? That's a big change for me. But like, the robots can't replace my day job. My day job is like, something's broken. When something's broken, like somebody made a mistake, somebody misunderstood something, there's like a really complicated thing going on in the system that is, you know, people missed. And the AIs don't figure those things. They don't actually, like, they can't analyze the system and understand what's going on. Maybe that happens someday, but right now they can't. They are just regurgitating input that you've already given it. So if you're working on something that nobody's done before, that's completely unlike anything out there, that doesn't help you. And when I ask it, you know, questions about problems that I'm facing, it often gives me the wrong answer. Like, the robot is useless without the person. giving it the input and asking the right questions. So it might make some people more productive, but I don't think it's this like everybody gets put out of work sort of thing, like some people are saying. I think that it's enough of a, it's a similar productivity leap to what the internet was. And the internet didn't put everybody out of work. The internet just created more work for people. And I think that that's probably what you're going to see is now there's going to be all of these opportunities to make content using AI. And then there's just going to be more jobs for people making content. What do you got here? Oh, hey. You made it into the top 10. Wow. 40,000. Good job. That's too much. That's like go and start your own fund. Why are you still trading with them? Oh, you answered that last time we talked about this, didn't you? Yeah, that's your best year so far. Well, and especially if you're trading indexes, so it wouldn't surprise me. Yeah, you've answered it like 3 times already. Tax reasons in Germany. Well, just move here. That's time to move to the United States or wherever whatever it is you're trading. Are you trading European futures or US futures? Hmm. The 99% MES bought the London Open to the... Oh, that's right. Because every time you bring that up, I think about how what my mentor was basically doing was trading the London Open in ES, and he was like doing really, really well with it. I was like, And there is like a bunch of research to suggest that like a lot of the market's upside in... at least in US indexes, is happening overnight, right? And so it's like, maybe that changes at some point, but... Ah, you see something now after that. So see, the version that I gave you, so here's, well, I've never done it for the dollar index, but like for the, for the spread indicators, I have like, there's like a basic version and there's an advanced version, and the advanced version rolls over for you, and it has all of the additional chart features like the candles and things like that, right? What I did is I created one for you that still has all of the advanced features, but it doesn't roll over for you. So in there's a setting for the month, and you're going to have to manually change the month every time that it rolls over. But basically what that means is that for some reason, the data provider that you are using is like different, and the way that your NinjaTrader is working is different, and perhaps it is a change in NinjaTrader itself, but basically like the data series information is not available when the indicator is setting up. So not entirely sure what I do about that, but I'll have to look deeper into that. But I'm glad that I
realized what method it was complaining about and taking care of that. Maybe for that case, I could calculate what, based on today's date, what the correct month is directly, right? Well, the treasuries have came up pretty aggressively before the start, but since then it's been nothing but retracing that. Now we are back to kind of like key market maker positions, so we'll see what they do from here. So now you should see your data series underneath, and then you still have the main one. And then you do this, right? You just make the 60 or whatever it is chart that you have it on, like just super, super tiny, so that you just only see the dollar index. That's what I do. What do you mean that will cost? Or that will save you? Well, it's working, right? I don't understand that last comment. I feel like I'm a little bit lost here. Oh no, China's infiltrators. They are coming here to kill us, says the Gatestone Institute. What is this? I can't help myself. I'm gonna click it. It's probably clickbait. China's Communist Party is at this moment putting in place the infrastructure in America to attack. Yeah, then they're talking about the biological weapons lab. You know, it wouldn't surprise me to know that China engages in espionage and has agents embed themselves in American society just in case. Just like I'm almost certain that there are American agents embedding themselves in Chinese society. But the idea that they're like importing an army and that there's like mass number of immigrants coming over that are here to like undermine American society is, I think, a little farcical. Like, there is no way that you could be doing an operation like that involve thousands of people and like not have people like defecting and all of that sort of crazy stuff, right? So I think that what's happening is they're doing stuff where it's like they found some information that like, oh, this one guy, they were a Chinese agent or whatever. So that must mean that all of the Chinese people that are coming over are Chinese agents. This story seems like, so I'm still kind of scanning over it. But this, I think, kind of looks like they're, that they're exaggerating. Oh, yeah, you would have to pay to use it after testing. But you got 2 weeks to see how it works. And it's only $100, so.
Tyler Perry puts $800 million studio expansion on hold after seeing OpenAI's Sora. Jobs are going to be... Oh my gosh. Okay, so you know what I saw yesterday that really made me go like, what? Okay. Because Reddit is basically preparing to do an IPO. Okay. So I'm kind of looking at this like, well, I wanted to stop using the website. I still kind of use it. I'm helping them. I kind of hate this website. Maybe I really need to stop visiting Reddit. But then it's like, yeah, but I get like so much news and information and like color about what's going on from Reddit, and there's nothing anywhere even remotely comparable. But so I don't know. But one of the things that they said is that they were gonna like open up initial shares to Redditors, to like the top 76,000 Redditors. So I don't know. That's probably not me. But then the other thing that we found out was that they pay their top moderator guy, Spez, like $250 million a year. Are you kidding me? That is a little infuriating, actually. I hate that guy. And I think he's done a terrible job. And they engage in like outright censorship, man. Ugh. It's actually, you know, that sort of stuff this past week has really like jumped back into the forefront of my mind. Like, we've always known that it's going on and everything, but I've kind of like just ignored it and been like, well, it's the thing. It doesn't really seem to be affecting people in that way, so I think it's fine. But then like the Google AI chatbot came out, right? And there was this whole joke about that, like nobody could get it to draw a white person. That was, and some of the things coming out of it, like draw a picture of Elon Musk and it draws a black Elon Musk. Like, what? It's crazy. Like, what were they doing that you know, the test data set artwork that they gave to it must not have had any white people in it. And this is Google, and people are like, think that Google is neutral, and it is not. It has an extreme ideological bias now, and it's only gotten worse. It's only gotten worse. And then Reddit. I mean, do people realize that Reddit has a strong ideological bias? I would hope so. I would hope so. Because it definitely does. The company has suspended Gemini's ability to generate human images while it vowed to fix the historical inaccuracy. You know what else I wonder? I kind of wonder what the discussion was when they were deciding what to name their AI chatbot, that they came out with such a boring name, Gemini. Okay, Gemini, that's cool. All right. Come over to Zero Hedge and see if there's any new interesting stories this morning. Reddit files to go public, set to capitalize on AI market boom. You know what? Actually, that would be like make me even more mad, right? And is maybe actually likely to happen, that like it comes out and then the stock just does crazy good because there's potential AI implications, like because they can sell the data, I guess. But that's all that's there. Let's read about this. Reddit, the community-focused message board site with tens of millions of daily users, filed an S1 form with the Securities and Exchange Commission on Thursday afternoon. The unprofitable 20-year-old social media company first filed confidently for an IPO in the second half of 2021, but missed its shot at going public. Now Bloomberg reports Reddit could debut on the New York Stock Exchange as soon as March. The S1 filing disclosed Reddit's financial performance ahead of going public. It has 73 million daily users and over 100,000 active communities. Revenues jumped 21% last year to $804 million as the social media company continued to hemorrhage, losing $158 million in 2022 and $90.8 million in 2023. Well, dude, I know how to solve that one. Fire Spez. Are you kidding me? Are you kidding me? One executive is your entire shortfall? Oh my gosh. That is ridiculous. Bloomberg previously reported that Reddit has been advised to seek a valuation of at least $5 billion in an IPO. That is of the $10 billion valuation the company fetched in a private funding round in 2021. Yeah, I was about to say $5 billion is kind of low. Like, that to me is kind of like, why are you going public if you're only going to give you $5 billion? We believe our growing platform data will be a key element in the training of leading large language models and serve as an additional monetization channel for Reddit. I hope not. Because the last thing that we want is our robot overlords to be based on Reddit. Oh, kill me now. Kill me now. I think tonight I will be playing Helldivers 2, and I will focus on the automaton front and imagine that all of the automatons are Reddit robots. Timing the IPO in the midst of a, quote, AI bubble is risky business. We are going to public to advance our mission and become a stronger company, Reddit's chief executive and co-founder Steve Huffman wrote in the filing. Reddit is the last of the original social media companies to go public after Facebook in 2021. Wait, what the F? Facebook did not go public in 2021. What are they smoking? When did Facebook? 2012. Yeah, they just mixed the 1 and the 2 up. Okay. I was like, where are they getting that number from? Let's see here. I'm seeing the S&P 500 kind of start an uptrend here again. Also some volatility in oil. But nothing too big there. Oh, I probably should switch though. We'll go to April now. Yeah, April. There you go. Label it in DX in the chart so other people see it from me, and they also want it in Ninja Trader, and then they bring it over to you as new customers. There you go. Well, so I have looked into creating like an affiliate program sort of a thing, but I was not really able to find a system that did that really well. So like something that really drives me nuts is that all of the integrations, oh, we got this cool service and we integrate with this service. And the integration is not like directly with PayPal or anything like that. It's always through WordPress. And I kind of explicitly avoided using WordPress in making my website. Just because it was like a complication that was not necessary for me. So it's all like straight HTML. And like the best sites for doing this kind of thing, they are WordPress ones. But I could still do it. I just didn't really dig that deep into it. But for you, I guess I'll look into it a little bit over the weekend, and then yeah, we can have an affiliate program, and you can make like $25 for each affiliate referral or something like that. I'm gonna try blowing my nose here. I'm just kind of getting that like stuff in the back of my throat. It's kind of making it hard to talk. Okay. Ooh, what's this? Integrated Open AI API. Oh, no. I don't want to use somebody else's API. I want to use my own video card. Well, I was on it in November. To find information on it very rare. Only one other company has an indicator, and most of the service to show it. It's over monthly fees for the data. Yeah, it does. Yeah, I mean, that's exactly why I have it, right? It was just like, this is really important to understanding the market, and I can't see it. So I'm gonna make it myself. Are you still planning to make a video about momentum? Yeah, I think so. If so, you should check out Kent. Oh, sorry. By the way, Mohammed Sabir, what was your name previously? You recently changed your name. Let's search for that name. Kent Daniel. Research interests, economics and finance. Google Scholar. There are so many different studies that he has done that you're gonna have to tell me which one I should be reading. Yeah, I will. Well, not tomorrow, Monday, but I'll see you Monday. Hell, risk in momentum strategy returns. It could be. The dynamics of disagreement. Let's tell it to switch and show me his most recent papers. Optimists, pessimists, and stock prices. The dynamics of disagreement. The discussion of robust portfolio choice. Role of hedging demands. What is missing in asset pricing factor models? Momentum crashes. Is that the study that you think I should be reading about? Is momentum crashes? Momentum strategies exhibit rare but dramatic losses, which we show are a result of the leverage dynamics of stocks in the momentum portfolio. When the economy is in a hidden turbulent state associated with a depressed volatile stock market, the short side of the momentum portfolio becomes highly levered and behaves like a call option in the market index portfolio, making momentum crashes more likely. We develop a hidden Markov model of the unobserved turbulent state that affects the returns on the momentum strategy and the market index portfolios. We find that the use of a combination of normal and student t distributions for the hidden residuals in the model to construct the likelihood of the realized momentum and market index returns dramatically improves the model's ability to predict crashes. The same variable that forecasts momentum crashes also forecasts the correlation between momentum strategy and value strategy, two of the benchmark investment styles often used in performance appraisal of quant portfolio managers. The correlation is conditionally negative only when the probability of the economy being in a turbulent state is high. The conditional correlation is zero otherwise, which is 2/3 of the time. Half of the negative value momentum relation is due to leverage dynamics of stocks in the momentum strategy portfolio. The other half is due to a hidden risk factor likely related to funding liquidity identified in Asness et al., which emerges only when the economy is more likely to be in this turbulent state. I don't know. That kind of sounds like something that would be like way beyond what we'd be putting in the video. I mean, I've talked about this quite a bit with you guys, so but what I want to have in the video is just, okay, this is how a momentum strategy works. They are well proven, but they involve trading a universe of assets and are not day trading strategies. Because I think that's kind of what everybody gets wrong, is they say, oh, technical analysis works, but they don't realize that the technical analysis that they think that they're citing, at least, or the thing that they said these people made money from, were momentum traders, and they weren't day trading, and they weren't trading individual things. So they're just barking up the wrong tree to begin with. If you want to trade one instrument on an intraday basis, your approach has to be completely different. And my hope is that by getting a video out there about that more people start to understand that, and less people kind of go chasing after things that are never going to yield anything for them. So in Discord, say something in the main chat. Don't post a link, because if you have like a brand new account, it won't let you post links until you've been regularized, is I guess what we should call it. Basically, when you join the Discord, you are automatically given, you are just on regular privileges, which does not allow you to post links or to really do anything. And it's not until I see you commenting in the channel that I add the permissions for you to post pictures and stuff. Yeah, some of these people in this thread, I was going back through my tabs, and it was this thread about China's invading us, and I was reading the comments, and there was one set of comments that was like, I'm pretty sure that like people are just, it's kind of tough in China right now when they're leaving. Yeah. I think so too. I think it's pretty farcical to think that you could organize tens of thousands of people in, secretly infiltrating a country and not have a large portion of those people defect and tell the country and all of this sort of stuff. So I think that it's a bunch of nonsense. I'm just still browsing around. Here's something about Kathy Wood. Kathy Wood may have lost 14 billion. At least she's investing. No, it's like she's been one of the largest wealth destroyers of all time so far. Oh, here's an interesting story. Scrum is not agile and is expensive, horrible, and no good for startups. So I have to go and read that. Scrum is expensive, horrible, and no good for... Okay. Probably not very good for most development teams. Sure. Bonds. How high do you think the 10-year treasury yield will get before year end? 4.5, 4.6, 4.85. I'm going to say 4.5. Majority of them say it's already peaked. Okay. I wish it was more granular because I don't know if they get to 4.5, but I don't think it's already peaked. Oh, about a minute before the ES Open. Really is a super light day. The only thing that we got, like news-wise today, is Fed's Dally at 1:30 Eastern time, which is pretty close to the end of the day. Oh, sorry, so I forgot what I was doing, Mohammed. You should be able to post that link now. Okay. Here's a start. I was just hearing the news squawk say that the opening imbalance is to the buy side. But I mean they're already up overnight, so that doesn't surprise me. White pandas feels clunky when cutting from R. Yeah. Oh, this is R stats. That's interesting. I'll join this. Oh, it was. So I was reading this story, just headlines, and I saw, one of the nation's largest unions gave a donation to the RNC. And I'm like, what? Okay, so now I'm reading a story, and it says Teamsters Union gave max donation to RNC after meeting with Trump. That's interesting. That is very, very interesting. Because it kind of seems to me that the Democrat Party has paid complete lip service, to unions, but then, like, when push comes to shove, they don't actually do anything for them. Right? Like the thing with the railroad union, I was like a really big one, right? they say all the right things what the union wants to hear, but then they're like, actually, we're just gonna change the law so that you can't strike. Like, they really like betrayed them. They really betrayed the railroad union with that decision. And I kind of wondered how that might affect the politics in the Democrat Party. And now you've got a union, the Teamsters Union, donating to the Republicans. That's a little interesting. Wonder if I can find more about that. AT&T, oops, our bad. Yeah, that was, so there was this whole thing that like AT&T had a huge service outage yesterday. I didn't notice anything. I have AT&T. Well, it looks like the treasuries did revert back up. They went right to the seller cost basis and bounced off of it. It was like right where I said, it was like, oh, they're coming into some key levels, and since then it's been nothing but up. Oh yeah, he posted that. Let's no wait, I don't see it. Oh, there it is. Price momentum. Oh, you got a video. Oh. Well. Well, that's a horse of a different color. Columbia Business School. And it's only 20 minutes. I'm down. I'm going to watch that today. Hopefully I have some time to watch that today. I tell you what, I've been busy. I tell you what, since I moved to my new job, the content coming out of me has been way less, hasn't it? It's basically turned into I only have times on the weekends to do it, and often I don't have that because my wife is working. So like, I haven't been able to make TikToks. Not that I care. I'm caring less and less about TikTok every day. In fact, I think I probably spend more time on Reddit right now than I spend on TikTok, which kind of upsets me because I really don't like Reddit. I like Reddit, but I don't like the company Reddit. Usually when a company like that goes public, that's like the beginning of the end, right? The community goes to trash after that. Well, I tell you what, the S&P 500 Open has been mostly a buy, but once again, it's pretty tight. Like, I'm actually kind of wondering if I should switch back to each tick instead of, aggregating the ticks, because it just doesn't move that much now. There's another story I'm watching on the political front is Catherine Herridge was an investigative reporter who was investigating some things that the Biden administration didn't like, including is Joe Biden really physically fit for the job? And she got let go, but now the CBS is not giving her data, all of her, investigative research and everything. So what's the update here? No. Well, the update isn't a huge big deal. It's just an industry or organization is now criticizing CBS for what they're doing. Okay. So we're getting flattening today. I'm not seeing much movement in the yield curve on the chart here, but I can kind of see here that my micro 10-year is at its lows, but the 10-year is not. So that kind of makes me suspicious that a flattener could be in the works. The Emmanuel Mike's kind of making it look like they're going to do a sprint here. Let's see. Yeah. So here's a story. 5 years ago, I started a new role and I suddenly found myself a staunch R fan, having to code in Python on a daily basis. Working with data, most of my Python work involved using pandas, the Python data frame library. And initially, I found it quite hard and clunky to use, being used to the silky smooth API of R's tidyverse. And you know what? It still feels hard and clunky even now 5 years later. I agree. R is better for data manipulation. I don't think that R is a perfect language. I think some of the methods and things like that are a little bit weird and overly complicated, and that's not very well it's very disorganized. But the syntax for handling data frames is easier to understand and more efficient than pandas. I basically, almost every little thing that I have to do in pandas, I have to go and look it up. I'm starting to wonder if there's something really going on in the treasuries here, or if this is just kind of the usual ebb and flow of things. I would say that, especially in the 10-year and in the 30-year, that the order flow is not very consistent. I am seeing a little bit of net buying in the 5-year, but the spreads are flattening, which kind of doesn't make sense that the buying would be mostly in the 5-year. 5-year would be the one most likely to be selling, so I don't know what's with that. I'm gonna recenter things here. I should try and keep a close eye on the breakout here, how it plays out. Might give us some clues as to what's going on here. So when I watch this sort of stuff, like the S&P 500 this morning, this is looking up pretty strong. I'm like, oh, the stock market is up. That means that I should be super active, right? But unless I'm trading the indexes, it doesn't. So maybe I should be trading the indexes right now, because I don't know. The Treasury is not, well, the Treasury is getting interesting, but so far this week, it hasn't really been very interesting, has it? Okay, mini taking a little bit of a step back there. The treasury's absorbing a little bit at 20. That kind of looks like a lure to me. Synthetic iceberg, maybe? Well, they clear it with 36.98 and it stays offer. So I'd say 36 with these kinds of liquidity conditions is not all that unusual. And then it ticks back up and down. I'm not sure if there's really anything that I can make from that. I don't really see any correlations, strong correlations with anything either. Because the dollar is kind of rising here. So there was some new highs there. I would say this is still like pretty much the thick of like yesterday's price action, but And I wouldn't say that any of the upside that we had was particularly dramatic or interesting or anything. There was some pretty strong volume in the 30-year. You see like that 950? But I'm still not 100% sure what's going on here. Kind of looks like everything's just going in the way that pumps the stock market the most at the moment. You know what I mean? Pretty good stacking. Yeah, well, and the liquidity in the treasury is pretty strong. So it does kind of make me wonder if there is like a real operation going on here. That volume there at 21.5 was decent. But that was the first time in the 10-year at least that I've seen like really clear volume to one side or the other. So I don't know if I can read too much into that or not. $4K average bid offers twos and dragging. The thing that I'm seeing is still confusing to me, though, is that I'm looking for autocorrelation in the market orders, and the place where I'm seeing the most clear evidence of that. Sorry, let me switch over to here. Ooh, that was a big one. Place where I'm seeing the most clear evidence of that is in the 5-year, and yet the yield curve is flattening. So why would I see more buying over on this side than on this side? That doesn't make much sense. There was a block buy there, though. The other thing is, I guess I'm not quite sure what would be the driver of today, other than that, we're down for the week, I suppose. Because there's definitely been throughout the week kind of a little bit of a battle going where there does appear to be some people like speculative buying, and then the auctions come along and price kind of sinks on the auctions, Big bid in ZT. I'm interested to see what happens now that we had that big market order go through. Because I saw 2640 trade, 1500 trade, and then 3000 trade at 21.5. So there appears to be like some sort of large iceberg there, and the buyers were trying to buy through it quite aggressively. Doesn't look like they've been able to like really convincingly stay above that, but it is a thing. It is an ongoing thing. And there's a big iceberg at the 21 as well. Maybe we got two big guys and they're meeting each other in the middle. Yellen versus Powell. Wait, why are you saying that? Nobody's talking about. None of those people are talking today. Here's an interesting thing that I see on Twitter here from Mr. Eric Wallerstein. Probably one of the better guys on Twitter right now because, I don't know, there's just not as much activity on Twitter in general. The Treasury basis trade is shrinking a bit. Decline in hedge funds basis and RV positions and the associated demand for repo financing could keep reverse repo usage higher than otherwise, thereby reducing the urgency for the Fed to modify its quantitative tightening strategies. Meanwhile, basically every financial regulator was sounding the alarm on the basis trade last year. Well, yeah, because it was getting pretty massive, wasn't it? Oh, I misunderstood. There's a thing about Joseph Wang. This quota system was how the Federal Reserve Bank of New York operated as well. I recall staff, there were about 70% men, but half of management were women. This was due to an unspoken quota system where management promotions must be 1-to-1 men to women. Ooh. And now all of these people are talking about these things where, like, at companies there was quota systems, and so there was all these situations where people were being told they were the top performer, but they can't actually be promoted because they have to meet their diversity quotas. Jim Iorio, M2 money supply has been going up, not down since May. For a relative comparison, consider this. If we kept the identical pace of money creation that existed from 2011 to 2019, a ridiculous fast pace to be sure, we'd be at the level that was $2.5 trillion less than where we are. The implications are twofold. First, this new turn higher is inflationary and corresponds with the turnaround in inflation. And second, there is still excess liquidity in the system fueling risk assets. I was not familiar with that the M2 money supply was continuing to increase. I thought that money was still relatively tight. The Federal Reserve told me that money is tight. Well, it's not. The interest rates are too low, relatively speaking, really. I don't know. Anything over 4% is kind of high, right? I'm not going to say that above 4% is low. Maybe too low, but low. No, I don't. Oh, I missed this. Elon Musk, a senior exec at Google, called and spoke to me for an hour last night. He assured me that they are taking immediate action to fix the racial and gender bias in Gemini. Time will tell. Yeah, I think you're going to have to... I'm not... Doubt. Press X to doubt. I'm not convinced that you're really tackling the larger problem here. You're just going to address that one product. When is the destroyed state of the... Oh, that's a good question. That's coming up soon, because I remember reading an article where they were talking about it, and they were... there's a rumor that Biden was going to take strong action on the border around that time. Which I was kind of thinking about and was like, well, if Republicans really want more money, or sorry, if Republicans really want the border shut down and Democrats want more money for Ukraine, then you can kind of make a deal and you can say, well, the reason that we did it was to make a deal and it will probably make things better. But if you just come in and you acknowledge essentially that actually Biden could just solve the entire migrant crisis on his own, that doesn't make him look good. Or then on the other hand, if he does something and it doesn't actually help the situation or it makes him look worse, then that doesn't help either. So the whole political strategy here seems kind of a little short-sighted, shall we say. But that's what's going on. But when is it? You want to use it as a reset, but what is the date? March 7th. March 7th. So 2 weeks from now. And Steffa, hey, how are you doing? Pull back to the open? But is that the end of it, or is that just going to be a pullback and they're going to go for another leg? I don't know, because I mean, again, where was it? 21.5? There was big orders at 21.5. It's kind of interesting that that was the end of it. Look to the dollar. Well, yeah, I mean, the dollar has been looking really strong here, hasn't it? If I zoom out, it looks a little bit better, but that looks like it's maybe still got some room in it. Should recenter things here. There is still decent like transactions. I'm not gonna say that like the overall volume is strong, but I'm gonna say that like the amount per tick that they're trading is relatively thick. What products do you trade the most? Just the 10-year. So I put sim trades up here in the full size, and then I put live account trades here in the micro treasury yield futures. I'm gonna move this over to here. Why sim? Well, so the things that I'm doing here in the main treasury are I am experimenting with managing multiple contracts, and I'm doing swing trades. And so I just don't think that those ones are quite ready for prime time and should be using my full account. And I really like to keep things small. I mean, I could trade the full size treasury, but I could very easily like get to the point where I would get uncomfortable and need to put more money in it, like even a month, right? So I think that I do a lot better if I just keep it small. So I just do these micro treasury yield futures. I did pretty poorly in January on that, but before that I felt like a rock star on the micro treasury yield futures. So hey guy man, welcome back. So this position that I have in the 10-year, this sim position that I have in the 10-year treasury, I've been holding that since last Tuesday. So we've kind of been a little bit less active this past week. We've kind of been, and it's been good because it has been a quiet period. You can kind of see how that goes, that like when you come into these quiet periods, the treasuries get really dull, but it tends to be good for the equity indexes. Wait, when you kind of zoom out here, look at the curve. Oh, excuse me. Look at the curve on that. Equity indexes are just so strong lately. let's see here. So I was just reading something. Now I'm coming back in here. You base all of your trades on the FP. I'm a supply and demand trader. What do we mean by FP? I don't know what that would mean. So here's what I have learned. Okay, the market is extremely inelastic, which means that when you put new orders into it, it moves a lot. It's kind of like market elasticity is like if you buy something, then the price of it goes up, and then that kind of reduces the demand for the thing because the price goes up. And so then the demand goes back down and the price will come back down. So it's kind of like there's this elasticity. It's like I have my two hands here and there's a rubber band between them. And as I pull my hands apart, the rubber band kind of tries to pull them back together because of the elasticity. The supply and the demand react to that change in price in a way that kind of makes price come back to where it was, right? Well, the running theory, or what the evidence currently supports at least, is that markets, are financial markets in particular, are actually inelastic, which means that when you put orders into it, it just makes the price move more. It's kind of like that rubber band thing. You bring your hands apart and then the rubber band just stretches and then just stays like that. Right? So now it's easier for me to move around here because it's inelastic. Right? So what that means is if I come in here and I'm like an index fund, right? And I have to buy or sell a certain amount of index futures relative to the withdrawals and deposits that have been made in my fund that month. Those moves, when I make those moves, they have a strong impact on the market. So like you've maybe heard of this Aladdin, is that what they call it? The algorithm that is running at it's not BlackRock. That's not BlackRock's. Who's the other one? Like some of these really large index funds, they have these advanced AIs. What those advanced AIs are primarily doing is they're trying to sort out what I should be buying and selling when to reduce my impact on the market, because their trades have such a strong impact. They cause things to move. And the issue is that those guys coming in and buying and selling have such a strong impact on the price, essentially, that it kind of eclipses everything else. So you could come in here and you could say, well, I'm looking at it here, nothing else is going on, and I see certain behavior, like it tends to mean revert, and I see all of these kinds of statistical regularities in it. And that may be true, but the issue is that this wave comes and just completely eclipses it. So it's kind of like you're on the shore, you're like at the beach, and you're watching the little ripples in the water and not seeing the huge wave that's coming at you, right? Because market is inelastic, right? And so what that means is that a lot of the things that retail traders tend to look at or want to look at are not really very useful on an intraday basis, right? What's going to matter on an intraday basis is there something going on, like news or whatever the deal is? So what are new orders are going to come into this market today? Why are they trading it? And what is the balance of those going to be? And can you predict those? And if you can, then you can predict where the things are going to go. And most technical analysis kinds of setup on an intraday basis are just not very effective. So there are some people that have made money off of what we'll call technical analysis. I don't think it's the same I don't really like to call it technical analysis. It's definitely not the same stuff that retail traders are doing. Okay. But like momentum, for instance, is a thing. Momentum is a thing, but they're holding it for like months, right? They're catching the beginning of a trend and holding it for months, and they're doing it across a wide variety of instruments. But if you're just trying to predict where this one instrument is going to go in the next 30 minutes, that stuff is almost useless. So I pay a lot more attention to what is going on in the news, what are various institutional strategies doing, basically any piece of information I can find that can potentially predict future orders. And my discovery is that the things that predict future orders on a short-term basis tend to be pieces of information that come from outside of the market and not from the price action and whatnot. So, like coding concepts, for instance, is super, super useful, right? I mean, man, the fact that I can just, anytime that we have a question or somebody has a good idea, we can just step right into coding and backtesting it really quickly is like a really powerful thing, right? I could probably make this stream nothing but that and catch some people's interest, right? But the problem is that on an intraday basis, you almost never find an edge with those things. Now, if you wanted to do momentum, it probably would make more sense to code those. Those, if you want to do like back testing, so you're probably better off back testing momentum strategies. Oh, footprint is what you were talking about. Well, I mean, I watched the DOM, which is similar to the, gives me the same information as the footprint, but I don't have a footprint chart up anywhere right now. I'm also very wary about like, quote, supply and demand. So, I mean, I would say that, so first of all, we don't call them supply and demand. Supply and demand are economic concepts and are very different from support and resistance, let's say, right? So if you say you're trading supply and demand, then what you're saying is, I am looking at what is in the oil market, how much oil do I expect people to buy over the next month versus how much oil I expect to be produced over the next month, and then adjust my estimates as the actual reports come out, and then you're supply and demand trader, right? But usually what retail traders mean is support and resistance, right? And I guess you could say that support and resistance are a thing, which is to say that you can frequently find situations where a stock will kind of find support in the same place over and over again. The issue is that we do not have anything that effectively predicts whether it's going to find support there this time or not. So it doesn't become a profitable trade. Just because it found support there last time, or even if it's found support there like 3 or 4 times, does not necessarily give you any efficacy in predicting that it's going to do it a 4th and a 5th time. Now, if you know why the support and resistance is there, that's a different issue, right? For instance, if you know that there is a correlation with another instrument and they are trading either correlated or co-integrated with that other instrument, and that's why support is there, then that's a different thing. If this other instrument is still basically where it was, then yeah, maybe I can just buy it there. But just on the chart, nah, doesn't work. Doesn't work very well. Has fat tails to it too, because what'll happen is, you make a little profit every time that you're right, but then when you're wrong, you're like really wrong, and eventually you will get into a market that's really choppy and that you just get diced up. And can you predict when you're in a market that's bad for you? Because usually people can't. If you could easily predict we're going to be trending or we're going to be range bound today, then it's like a different story, right? Because then you can say, all right, here's my range bound strategies and here's my trending strategies. But then there's this other issue, which is like, especially in the treasuries, when it is range bound, it's really hard to make money off of those range bound things. I prefer to just not touch it when it's doing that. Would be a different story if it was ES. If I was expecting ES to be range bound, then I could maybe take a little bit out of the middle. Okay, why can't you catch the intraday momentum? So it's not that you can't catch the intraday momentum, it's that you don't make enough off of the intraday momentum to account for all of the losses that you catch with it, right? So basically, well, first of all, I don't know if there's really a lot of evidence for like intraday momentum anyways, okay? But as far as my research has gone, in order to make money from a momentum strategy, you really need to be holding these things for like several months. And basically there isn't enough time within the space of a single day for that strategy to really work out. You have to hold them overnight and for multiple days. And then it works. And on top of that, you have to do multiple instruments as well. So like traders will say, you ask, okay, so what do you trade in? They say, oh, I'm a day trader and I trade momentum. No, you're not. Because in my opinion, momentum is not a day trading strategy. You could potentially factor in what is happening with like a current day time frame momentum signals and factor that into your trading system. But you're not actually trading momentum if you're doing day trading. That's the way that I would put it. This is what I want to talk about in my next video, because I think that a lot of people, they say, I should do technical analysis because technical analysis works. And I know technical analysis works because this person and this person. Like I know that this big quant firm, that they use a moving average or something like that. It's like, well, yeah, but you realize they're not day trading with that strategy, right? So it's not really applicable to what you're trying to do if you're trying to trade a single instrument day trading. If you're trying to be a local, like what we do with the treasuries, where you come in and you only trade the treasury every day, completely different game. And the thing that I'm trying to tell you is, if you want to come in and trade a single instrument every day, you need to be an informed trader is what you need to do. Yeah, it was Vanguard. Maybe it's Vanguard that has Aladdin. I forget. How much time we got left? 20, 25 minutes? Well, the treasuries are right back there at that 21.5 again. Felt like that pullback was a little bit deeper than that, but then I look back at the chart and I'm like, no, it was only like 4 ticks back. So, and I do realize where I had just reset it from, that it was not that far, you know, it's only 2 ticks up. So let's see what they do with the 21.5 this time. I would expect that there would still be a decent amount of liquidity there, and then there definitely would be some liquidity above that, but maybe we start to get like some stops, and it, you know, the buying was pretty aggressive through there. I don't know why. but there does appear to be something in the background there. From what I have practiced and coded via my practices, I wonder why you're using the word practices. Where are you from, John? We perform quite well. Interesting insights. Yeah, so I have a couple of videos where I talk about like building a system like this, you know, and like the programming side of it. The big thing that I find over and over again when people start backtesting is that their backtesting is not robust enough. They don't backtest large enough data. They're not looking at enough metrics. And so you get this thing where they'll come in and say, look, this is like super profitable and look at how good it works. But then when you actually look down at the actual metrics, like it has a terrible Sharpe ratio and there's actually some relatively bad drawdowns. But then even more important, you really have to backtest a bunch of data. Like if you've backtested it over 1 or 2 years worth of data, almost useless. If it's a day trading strategy, I would want at least 5 years of data. And hopefully over 5 years of data, I'm getting tens of thousands of trades. Like if it's a really good intraday system that's really profitable, you probably will get tens of thousands of trades. But what will often happen is, you know, you'll say, this one thing happened once and I didn't want to trade that one, so I added a filter to filter those ones out. And you keep filtering more and more trades out until the system doesn't take a whole lot of trades. And so 1, you're not making as much because you're not making as many trades. And 2, you don't have as much data to verify the performance of the strategy. So then you get to something where it's like you take 5 years of data, but you don't even have 1,000 trades. Then you don't really have enough data to make a conclusion. But if you have something that's like 5 years, 10,000 trades, and has a Sharpe ratio above 0.5, then I'm interested. Then I would want to see it. But nobody's ever shown me one of those. Like given me the code to a Ninja Trader strategy that meets those qualifications, that's never happened. There was one that was actually, let me pull that one up. I don't think I have it over here. I think I need to copy it. Guyman says, well, that's what happened to me when coding my day trading strategy, right? This is like, the thing that I think is really interesting about this is that I didn't like read any of these books to learn these things. I just went and did them all myself with a pretty good understanding of the market and a pretty good understanding of the statistics. And I did know about like Nassim Taleb's work, generally speaking, fairly early on. But a lot of it was just me trying a strategy and then trying to convert it over to live and it not working on live and like going like, what the heck? And that's kind of how I learned these things. So it's like, there are like the same fallacies. Everybody falls for them. If you haven't been warned, you're probably going to make the mistake, you know? Let's see here. So I had made so many strategies that when I switched computers, I didn't pull them all over. I think it might have been this one. Let me see. Might have been that one. Oh no, it was one of these. Was it this VMA back breakout, I think? Let's try this one. Let's see here. 1 year data, 2,000 trades. Sharp is over 1. Yeah, but 1 year of data. Even 1 year of data in a Sharp over 1 isn't bad though. I mean, that's like shows promise, but why only 1 year? So here's the other thing. So you only using 1 year is immediately a red flag to me that says that you're using TradingView. and if you're using TradingView, I am deeply skeptical of the TradingView backtester. I have just never seen, I don't know what the specifics are, but it seems to me that the TradingView backtester is not very realistic. It's too expensive to go too far. No, it can't be. If you're not using like tick replay sort of stuff, you're not using normal bars. Uh-oh, that's another one. So what kind of a bar are you using? That's another. So there are some bars that outright cheat. There are some other bars that I feel they are not very accurate, or they don't translate to live very well. Volumetric. Oh. So not volume, but volumetric. So you're trying to use the volume profile? Well, wait, that one doesn't make sense, because the volumetric bars, like NinjaTrader doesn't give you access to any of the stuff inside, so you can't actually use those ones. I did paste it in here, didn't I? In custom strategies. Hold on. Is it like got the name wrong or something? No, maybe I just need to pull up an editor window and like recompile. Yeah, Renko bars cheat. So Renko bars cheat because they rewrite past bars. So actually, if you do a backtest on Renko bars, what often happens is like, oh, it worked so good when I was looking at it in a chart, but then the backtest it's wrong. And why is that? Well, it's because it redraws the bars to make the chart look good for you in the past. So Renko bars are basically all about lying to you. That's why I hate them. No, Tick doesn't rewrite bars, does it? Well, now I'm gonna, if you say yes, then I'm gonna go back and look at it. I guess I'm doing 6 years of data, not 5. I'll go back to 2018. I feel like that 2019 is it's kind of funny that we're getting into 5 years post 2020, because I'm kind of a little bit skeptical of any strategy that has only been profitable since 2020 is another thing, right? Isn't volumetric footprint with any type of bars? Yeah, that's what I thought. Oh no, I'm sorry. The stream like just disconnected and reconnected. Hopefully you're all still there. Let's run this. Anyways, so Renko bars, they kind of cheat because the back changes. Heiken is she bars. So if there are like these gurus running around saying, oh yeah, this strategy works really well and I'll give it to you, and then you run it and they tell you, oh, you have to run it on Heiken is she bars. Heiken is she bars cheat. Because Heiken is she bars are basically changing the high, low, open, close based on like these statistical measures. It's like an interesting concept and everything, but you can't backtest on them because it's relying on that close to know what price it could get. And it's basically going to take a price that it couldn't have gotten. So those ones cheat because of that. Then there's range bars. So I did a lot of backtesting on range bars and I found some strategies that worked really, really great. And I'm like, hey, I'm actually really good at this. And of course I would be because I'm a computer genius. And then when I actually started to try and trade them, they didn't perform the way that the backtest did at all. And I'm like, what the heck is going on? Well, what's going on there is that you get a new bar every time that we move a certain amount. It's essentially biasing the algorithm towards taking a trade in a situation where like people are stopping out and things are moving and you're not actually going to get a fill. So you basically are optimizing your strategy towards doing things that won't work live. Isn't that funny? I think it's funny how that works. Because tick, volume, range bars all create more bars when there's more activity. You are essentially biasing your algorithm towards you're optimizing it towards taking trades in situations that aren't going to translate to live. So I recommend that you always use minute bars. So here's a strategy that somebody gave me like way early on. And it's literally just a simple moving average, volume weighted moving average, like crossover sort of a thing. And it's only goes long, but the like net profit that you make on it has always impressed me. That's with just using one contract. That's pretty good. Not chart. I want to do analysis. Yeah. That's not bad. That's not bad at all. But So in this case, this is where I kind of look at, so what are some warning signs in this one? The Sharpe ratio is 0.37. Profit factor is only 1.07, so it's not very high. The probability, so this is basically saying like, how much do you make on average from one of these, and ergo, what are the chances of these statistics holding up over a larger sample is relatively low. So like, this has always been like a profitable strategy, but the metrics just aren't very good. And when you kind of look at what it's doing and everything, you know, to be taking on that much risk is kind of hard to justify for what you're getting out of it. That is, because then why not just buy and hold? But then the other thing about this strategy that really, really concerns me is that it only takes long trades, and I tested it on ES. What happens if I come and I trade it on ZN? Only takes long trades. Well, I can tell you what's going to happen right now. It's going to lose. Yep. $80K in a year ain't bad. Let's see here. What's for the ones? So I've only been on this computer for like since December, so only like 2 months, right? But let's see. What's the most profitable ones that I got on here? Oh, I have some that over 5 years are 800,000. Not bad. Now these ones, this is a swing strategy, is what this one is. But you can see here, this is where I'm like kind of talking about some of the things that I was saying. Okay, so this is a little bit different of a situation because this is not an intraday strategy. Okay, in fact, oh, is that, I'm doing it on 5-minute bars? Huh. I thought, well, here's the ones that are on daily bars, right? Okay, it takes 800. Oh, that's right. What I did was, it is still doing a daily. It is still trading on daily bars, but I'm putting it on a 5-minute data series to try and make sure that the prices that it's giving me are accurate. Because you can have these situations where, like, you know, with your stop and your target was perhaps hit in the same time. Oh, I also think though, let's go to, well, there's an optimization for this. Can I just pull this one up? Yeah, it does let me do that. Okay. Do I... There's so many different... Okay, so the way that this strategy works is I've taken like 4 or 5 different things that I have found to have some efficacy on daily timeframes and combined them together into a voting strategy. And then the algorithm will enter and exit trades based on a vote system. So that's why there's so many parameters. But I thought that I had a thing in here which was like whether or not like what my risk factor was. And I'm not seeing that. All right, just go to do it in backtest. And I think that the more recent versions of it have that. Oh yeah, that's right. So one of the reasons that I was kind of like weary about this strategy was that it didn't translate to multiple instruments. It only worked in ES, essentially. And especially for what I'm doing, it's got to be able to work on like lots of different things. So I think what I'm going to be doing is I'm going to be taking those indicators and so forth, and I'm going to put it into my own backtesting system and go and get like data from Norgate, I think, and generate a universe of assets that I'm going to trade and have it take trades in different instruments based on the factors and, you know, do a momentum strategy like that. But it was kind of an interesting exercise because how things performed on daily bars compared to 1 minute bars were dramatically different, especially when it came to moving averages. Like in a moving average on a daily basis, like EMAs and double and triple EMAs were by far the best performers, whereas on intraday data, EMAs were terrible. So anyways, so there's a couple of the problems. So just some caution. In those videos that it's a little video series. I'm sure you'll find it if you go back far enough. It was it's been a long time though. It's kind of crazy to think that it's 2024 because like I felt like at 2020 that the stream had been around for a long time and I made some pretty big shifts. And then I made like some of my best content, and then it's been a long time since that. It's been a few years since that. So, but this was before all that. And I talk about like how you should go about testing it, that you don't just go like, okay, the back test is good, let's take it live. Like, no. Next thing you want to do is run it against live data, but have it trade in a sim account. And then at the end of the day, you know, run the back tester on that day and say, okay, were the trades that it actually took when it was running live the same as the trades that it took in the back tester? Because I think you're going to find that often that they're not, that it ends up taking different trades, or that the prices are different. It's like that the price that it gets is not the price that it got in the sim. And then it's like butterfly effect sometimes, right? It's like, well, in your back test you got filled, but live you didn't get filled, and so it didn't take a trade. And because you weren't in a trade, it was still looking for trades, and then it ended up taking an opposite trade. And so on the live account, it actually ended up being a loser, and in the back test, it ended up being a winner simply because of something getting filled or not filled, right? So this is why I have to test those sorts of things. And then it's like, you know, if you've been doing that for a month or two, then you have a pretty good idea, and you're verifying it. This really truly does work. And then you can think about taking it live, right? It's the same thing with like momentum strategies. So like the sorts of things that could mess you up in a momentum strategy is like, okay, how do you deal with the rollover? Right? Because when you're doing these back tests, you don't have to roll over. So that's something that you're not factoring into your back test. But then how do your indicators deal with the rollover? Because you're probably back testing it on data where the chart is like back adjusted, right? So they're basically like filling the gaps in and just moving these. And so those prices weren't actually the prices that you would have caught at the time, right? But there are some indicators that, because of the way that they work, they just don't work on those. It like breaks them. And so then your performance when you're trying to run it on a live chart does not match what your back test was, because it's a completely different, it's like a different chart, right? Or it's like a really illiquid instrument, and then there's like real problems with rollovers, right? It's time for me to get going. Man, I kind of lost. Once you get me going on the right thing, right? I just completely lose track of time. Hope that I'll have some time. I really want to write that video about momentum for you guys. So hopefully I get that done this weekend. I really, really hope that I get to start on finishing the table because I'd really like to get that out of the way. But hey, guys, I will see you next week. Let's set a title for today. Rally continues. 23rd. Okay, cool. Guys, I will see you next week. In the meantime, stay excellent.